Netflix stock is up 7% after reporting their latest earnings report. What has happened? Well, it showed again why the streaming wars has been won by Netflix. I don't think this is a surprise anymore. The king of streaming is Netflix, and they showed their strength yet again. Now we're going to dive into that report, but first let me show you the growth estimates for the coming fiscal years and show you that this company is not actually that expensive. Now, right now, it has a market cap of $215. Of course, after that 7% jump, it will be a bit higher. It has a forward PE of 32.5 times. But if we look at the estimates for fiscal year 2024 and fiscal year 2025, let's just jump to fiscal year 2025. EPS is at $19.51, meaning you're paying around 27, 28 times forward PE or PE of fiscal year 2025. For a company that is growing over 20% year over year, that is not that expensive at all. And as you will see with the report, there is still so much growth ahead of that company, ahead of that market, shall I say. The switch from linear to streaming, and not just streaming on TVs, it's streaming on a lot of devices, is still early days, believe it or not. Now, currently, at the time of making this video, there are 47 analysts covering this company. The average price target sits at $492. Of course, with the after hours action, that represents a 5% downside. But rest assured that a lot of analysts will upgrade their models, will upgrade their price targets as well tomorrow before the market opens. Now, before jumping into this earnings report, do me a favor by hitting that thumbs up button and subscribe if you have not. It's free, so why not? We're going to follow a lot of companies this earnings season. If you want to support me even further, do check out the link down in the description and in the pinned comment to get top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first things first, they start by saying here, they just entered their first year with Ted and Greg as co-CEOs under their leadership. Netflix achieved key financial objectives they set at the start of 2023. We're going to look at that in a second. Now, looking at 2024, what are the opportunities ahead? 1. Increase the value to members by further improving the core series and film while broadening their offerings in games, live, and sports adjacent programming. More on that later on. Tap into a significant new long-term revenue and profit pool by scaling the ad business. Deepen the connection with fans through marketing, consumer products, and innovation new live experiences. We've seen some hints with the show, the Netflix Cup, right? A mix of the people from Full Swing, the golf docu-series, let's call it, and the guys from F1 Drive to Survive. Instead of jumping into pure live sports, offering streaming rights of whether it's NFL, MLB, MLS, NBA, you name it, which costs a lot of money. And their reason for not doing so for many years is because, it's just not a profitable way for them to grow. So they went to the docu-series way, talking about your favorite sports teams, favorite sports personalities, following them through their season, to their stories, etc., etc. For them makes more sense. Storytelling. Now, the same day that they reported their earnings report, this came out. So they're excited to announce that starting January 2025, WWE Raw will be live on Netflix, exclusively in the United States, Canada, UK, and Latin America, with other countries and regions to be added over time. Now, it is reported that this deal is worth $5 billion over 10 years. But here again, I think there is going to be a mix of type of docu-series and, of course, the live events as well. Now, some of you that are not aware, WWE has an enormous fan base. If you go just on YouTube, for example, their channel has close to 100 million subscribers. It's an extremely loyal subscriber base. So it makes sense for Netflix to go after that first. I mean, they've done a great job with F1. F1 has become extremely popular thanks to Drive to Survive. I believe they're doing a good job with Full Swing, with the golf series. Breakpoint is a bit of a hit and a miss right now, especially if you look at the editing. It's completely horrible. One shot hits a forehand, the next shot, they make it look as if it's the same sequence, but it's looked like the person just hit a backhand. Just doesn't make any sense. Anyways, this shows the intent of Netflix to try out new things. Live events, live sports events, docu-series, etc., etc. I mean, if we're looking for what's going to happen in March, we're going to have an exhibition match called Netflix Slam between Rafael Nadal and Carlos Alcaraz. I think the numbers from that would be extremely interesting. Now moving back to the main numbers. So revenue came in at $8.83 billion. That's up 12.5% year over year. Operating income of $1.49 billion with an operating margin of 16.9%. Of course, huge improvement from the same quarter last year. As for net income, that came in just short of $1 billion with diluted earnings per share at $2.11. Now, this is the big number here. Global streaming paid membership, just over 260 million. That's a 12.8% year over year jump. So a huge increase, especially since we remember back, I believe it was the start of 2022 or so, where they lost a bit of the subscribers and people thought Netflix is dying. Well, quite a comeback. Global streaming paid net addition of 13.12 million. As for cash flow and net cash provided by operating activities, so cash flow came in at $1.58 billion, net cash provided by operating activities $1.66 billion, and shares outstanding have been reduced by around 6 million. Now the forecast for next quarter, revenue growth of 13.2% year over year, reaching $9.24 billion, operating income $2.42 billion with an operating margin of 26.2%, net income of $1.97 billion, and diluted earnings per share basically more than doubling quarter over quarter, reaching $4.49. Now talking about next year, as they previously said, the strikes will cause some lumpiness in the year-to-year free cash flow progression. For the full year 2024, they're assuming no material swings in foreign exchange. They currently expect free cash flow to be approximately $6 billion. They continue to expect the same number here for cash spent on content of up to $17 billion. And in Q4, they repurchased 5.5 million shares for $2.5 billion. They have $8.4 billion remaining under the current buyback authorization. Now, going back to the point I mentioned at the start of this video, the opportunity ahead. Well, according to them, they believe they still have a lot of more room to grow. It's an over $600 billion opportunity revenue market across pay TV, film, games, and branded advertising. And today, Netflix accounts for only roughly 5% of that addressable market. And our share of TV viewing is still less than 10% in every country, which we can see right here. They compare it between Poland, Spain, Brazil, Mexico, US, and UK. So yes, still a long way to go. Not just for Netflix, by the way, for all the rest as well. But when you're king of the arena, you're probably going to grow faster than the other and in a more profitable way as well. Now, just because the projection look nice doesn't mean they'll succeed. But if you look at the numbers here, when it comes to content and engagement, I think it's pretty clear that people enjoy going on Netflix. Despite there being some controversy with regards to some movies, some TV shows, not all of them are that great. But sometimes you just want to watch something for the sake of just watching. And so if we look at the rankings here, according to Nielsen in the US in 2023, Netflix had the number one original TV series 48 out of 52 weeks, original film 41 out of 52 weeks, acquired series 44 out of 52 weeks. It's pretty clear that people enjoy watching shows on Netflix, and once something becomes popular, it has that domino effect of, well, someone else watching, you tell someone else, they go watch it as well, and then it goes up and up and up on their rankings. Then moving on to the other segment, which is games, which is still pretty small, but they say here, while it's still early days for a games offering, engagement tripled last year. And despite games still being small and certainly not yet material relative to our film and series business, we are pleased with the progress. They give us an example here. In Q4, they debuted GTA Trilogy from Rockstar Games. This has become their most successful launch to date in terms of installs and engagement, with some consumers clearly signing up simply to play these games. Pretty impressive. Now, here they reiterate the goal. The goal is simple. for people to know that when they start a show or movie, they will love it. Because when people regularly press play and stay, they're happier and place a higher value on that service, which means they stick around longer, retention, less churn, and recommend Netflix to their friends. Acquisition. Pretty simple if you ask me. Make something people like, and they'll continue to come back. Moving on to monetization. They talk about pricing, price increases, stuff like that. Then they also talked about monetization sharing, the password sharing, how that's going on. It's going on smoothly, but the most important part for me is the second one, which is advertising. In Q4 2023, like the quarter before, the ads membership increased by nearly 70% quarter over quarter, supported by improvements in the offering, for example, downloads, and the phasing out of the basic plan for new and rejoining members in the ads market. The ads plan now accounts for 40% of all Netflix signups in the ads market, and they're looking to retire the basic plan in some of the other ads countries, starting with Canada and the UK in Q2, and taking it from there. Again, advertising, we knew this was coming, everybody is trying it out, everybody will adopt this model. Why is that? Well, it's cheaper for the consumer to sign up, and for the company, they can make more money through advertising, higher margins there as well. So overall, to conclude, streaming wars is done, it's over, Netflix won, Netflix is king of streaming, whether you like to admit it or not. This was another good quarter, good guidance, still early days in the whole switch, linear, streaming, advertising, gaming, live events, live sports, you name it. It's still early days despite this being a $216 billion company right now. Yes, it's up a lot, doesn't really matter. If the business continues to grow at this rate, the stock will follow, and who knows how big this can become. My only regret here is not having it in my core portfolio. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.